So we have the OCR still at a stubborn 3.25%. The Reserve Bank has indicated that it will lower it a bit later in the year in anticipation of getting it down to around 3%. With the bad economic news that we're seeing at the moment that suggests that the recovery is a bit more sluggish than most were expecting, I think the OCR's still got potential to go a bit lower, and I wouldn't be surprised if we saw it get as low as 2.5%. But that's a little bit uncertain. If we look offshore into things that are happening both in the Middle East, in places like Ukraine, and then of course tariffs in the US, that's all inflationary. Offshore, longer-term interest rates have spiked up in anticipation of inflation. So I think we're caught between maybe some inflation concerns offshore with a deep recession that we're struggling to get out of at home. What I think that means for your mortgage, ideally splitting it into two, fixing part of it longer term, 4.95% for 3-year fixed is a very attractive rate. Leaving a chunk of it, maybe as much as half on a short-term rate, and taking the opportunity of any lower rates later in this year, timing of which is a bit uncertain.